Hey everybody, welcome to Trading Capital Crypto Analysis. We're going to analyze a couple crypto coins and specifically just focusing on the crypto market in this particular video. That being said, the crypto market is correlated to how the stock market moves. So if we see immense heavy selling pressure, specifically in the S&P 500 and the QQQ, then we're likely to see downside pressure in crypto. Let's just start off with Bitcoin. Bitcoin here, you can see that we're trading in this interesting range here. And if you collect those pivot lows, you've formed this clear channel. Your neckline of your left shoulder, your right shoulder, you break down, and you've created this pivot where you've been trading in this sideways range now for a couple months. And you've tagged the top end of this channel where we issued a short alert, and you're slowly pulling back. And the beautiful thing about this pullback is now you're putting in classic bearish consolidation. So the pattern still has maybe a couple more days to trade sideways and this up and down chop, but ultimately you are stuck in a bearish range, and this points to further downside. Once this pattern triggers, I think you definitely head lower to this middle part of the range where you'll start finding more support. One of the key levels I'm watching is this longer term trend line, which connects basically this pivot zone, a whole bunch of chop, another pivot high, pivot high, pivot high, and then it was your impulse move bar from your breakout. So that's where you're going to find support off of this falling trend line. So you can see that once you fall, you are going to hit this trend line and most likely hold for maybe a couple days. Ultimately, I do think you eventually break that and head to the bottom of this chart specifically here. Due to the reason why it'll be interesting to see how Bitcoin fares in this tightening cycle. If we simply flip back to the 2018 tightening cycle, because that was the closest and most likely period, you can see here that upon the 2018 cycle reaching peak force, you had Bitcoin at 19,000 and it dropped all the way to a low of 3,185. And what's interesting is that 2018 was the year when I started being interested in crypto. I didn't hold crypto at those highs. I thought it was due for a pullback. But Bitcoin fell at the end of the tightening cycle 83%. And I heard the same comments. Oh, Bitcoin's too big to fail. There's too much institutional support now. There's too much big money. And yes, Bitcoin has grown over the years, but it's 100% been fueled by the excess liquidity that we are now fighting. The excess liquidity that was printed over the last 24 months is now turned into the boogeyman of inflation, and we have to fight that. And ultimately, as long as the Fed keeps fighting inflation by tightening policy, I do think crypto assets come down substantially, just like they did at the end of the 2018 cycle. So even if we were to, let's say we were to fall 85% like the last cycle, that takes you to 10,000, which just so happens to coincide with the pre-COVID level before you started all this money printing. So does it make sense if it fell 85%, the same as the last tightening cycle, that it reverts you back to the level before any of the QE money was injected into the system and caused this huge, massive bubble? You know, I could, from a logical standpoint and not overcomplicating the analysis, I could see us, if the Fed sticks to full tightening mode, to basically erase the whole bubble that was created. Now, that's going to mean there's substantial pain for a lot of investors and the economy, but it would be the healthier thing over the longer term view to have completed as a recession or some sort of full economic cleanse, get rid of all the margin, all the leverage traders, and really try to revert back to a more of a stable valuation. And let's jump to the Ethereum chart. Same kind of chart. You're trading within this parallel channel. You can see that you bounced off of the channel. The cool thing about Ethereum is that it's been lingering with this 200-day moving average, and it keeps failing. The longer it fails at this level, it likely suggests there's a pullback. Same thing like Bitcoin, there's a longer term trend line to watch, connecting that pivot high to that pivot high to this pivot high, and then you slowly intersect roughly at the middle point of this channel. I do think that's a big area of support where you could potentially play it for a minor bounce swing trade. Ultimately, I do think you head to the lower end of this channel before breaking down and testing the new lows. Let's take a look at Luna. We'll go to the crypto. So let's just remove all those. Luna has been holding up a lot better than the other cryptos. On a technical basis, it's above all of its key moving averages, the 200 and the 50, but it's starting to get a bit extended. The measured move of this bull flag here is probably going to take you a little bit higher, maybe to around 125, 130 zone, but expect a short trade opportunity in that range. Now, it may not even get there just due to the conditions of the market and potentially another down leg of selling starting. But that being said, it is holding up. You can expect a mean reversion back to the 50-day moving average at the least. Terra Luna has been hyped up lately because they've backed their balance sheet. They put a large portion of their capital from their balance sheet in Bitcoin, so they're now holding Bitcoin on their balance sheet. And when you think about it, if you're in the camp that you think Bitcoin in the short term is going to go lower, ultimately it will affect Luna in the short term. Let's take a look at Solana. Nothing changes for the crypto. Here you can see Solana showing weakness. It put in that beautiful daily topping tail as you ran into a resistance pivot high here. You had a retrace. It looks like a 618 retrace of the topping tail. And then you pulled off and had another reversal, and you're following that up with more downside. Ultimately, your first level of support on Luna is going to be in and around here at the 113 mark. I do think you eventually go to test the lows here and ultimately much lower, potentially back to these major pivot lows once the economy bottoms out. So plenty of more downside in our view in the crypto market as a whole. I don't think at these levels they're sustainable. The interesting thing about this chart is that you still have this major topping pattern in effect. It's technically been triggered, so the probabilities still dictate, and that's all we do is probabilities based. The probabilities still dictate that there's more downside ahead in Bitcoin, and it certainly is easier to believe that when the new economic policy cycle is changing. Okay, so that's the biggest difference as to why I've turned bearish on US equities and cryptocurrencies in the short term until their valuations come down to a more reasonable level, is because our economic policy period has officially changed. The Federal Reserve is now blowing wind at investors' faces. They've got a turbine fan blowing at us now with rates rising, and if they start quantitative tightening, if they really start selling the assets and dumping them into the market, then that only has one outcome. There's no need to overcomplicate things, but once they start actually reducing their balance sheet, that's the final trigger for this market, in my opinion. So that being said, more downside. Our short in Bitcoin is playing off well. Our short in Ethereum is playing off well. Our short in Luna and Solana didn't hit. It wasn't triggered, but those ones could float up a little bit more. Obviously, crypto is going to move, I think, with the S&P 500. Notice how Bitcoin's down, so is the S&P, so is the NASDAQ. So it still shows that they're correlated. They are risk on assets. So when there's risk in the market, they're going to not perform as well.